All right, everybody, welcome. Doug McKay, antiwallstreetguy.com on the 17th of February, 2012. S&P looking at a monthly chart, closed today at 1361. We got above that 1350 level. We are also above the 61.8% Fibonacci level off the lows of March '09. The next fib level would be 78.6, and that roughly equates to about 1382 on the cash, and we're basically 19 points below that today. That doesn't mean we're going to get there, but certainly that is the number that looks achievable. That would also put us just above the 2011 highs of roughly, well, let's just look at it. The high in 2011 on a print was 1370. All right, so overall this looks very good. Again, we're potentially looking at some type of cup and handle where if we were to trade sideways here, hold support around 1325, 1322, it's quite possible we could press 1400 or even higher. And if it all falls apart, we will sit up on our seat if we were not holding 1322 or 1325 on the cash. And also we would be gone for sure if we were to break 1300. If we were to break 1300, we think that would set up for a move down to roughly between 1250 and 1275. But as it stands, the overall trend looks good. The concern would be volume, but obviously price comes first, and price looks good. We did do a little hedging last week in the managed accounts. Going into Friday, we covered that hedge on Monday just above break even. And going into the 3-day weekend, we also did a little hedging against our long positions as well in the managed accounts. Let's go back again to a monthly chart. I don't want to do this too quick. But this is what we're looking at. This is a very bullish pattern. Could we do some type of top here and head down? Yes. Is it more than probable that we're going to see some selling here and some sideways movement? Yes. Again, we're looking to maybe build out some congestion over here and create a right shoulder off an inverted head and shoulders, which is obviously bullish. And that's it. Still no pullback yet, as you guys know, of more than 1% in any one day in 2012. A couple things we're looking at. We do not have a position in gold. You know what? Let's go right to a daily chart, and then we'll flip over to gold. Same thing, but I'll do it again in the event that you didn't see the video last week. We'd want to see a close above 170 on GLD. Otherwise, I think we could just continue to roll over here down to this previous breakout area of roughly around 162. We also do not have a position in silver or copper. Again, this could be some type of extended rolling over pattern here. So we have no position in silver. We have no position in bonds, but we are keeping an eye on short treasuries via the TBT. And this is a decent looking chart. If we got above 1960, that would increase the odds that we're going higher. This is an ultra, so it's double the ride, so your risk may be a little farther back percentage-wise, but I would have my stop under the low that we put in Wednesday. And that low was 1869 if you look off to the left there in the box. What else? Couple decent looking charts. This is First Republic Bank. Very nice looking chart. Remember, what we want to do is pick up stocks or ETFs that are coming out of basis. Even though there's very little volume in the market right now, which is really the only thing that the bears can hang their hat on, this has decent volume. And we can also look at a chart of Intel. This is something that we put in the managed accounts today. Why? Because it broke out of a base, and it did so on an increase in volume. I think we picked it up just over 27.21. I think the high today was right around 27.50, and obviously we can see the close at 27.37. We're going to play this kind of tight. Even though we like the stock fundamentally, technically, Again, it's all about discipline and cutting the losers short and quick, even if you have to enter at a later time at a higher price. But we would have our stop just under the low that we put in yesterday. So we want to be within that 5, 6, 7, 8% at the most on a percentage basis back. Let's take a look at energy. Had a good day today. Basically, all commodities are deleveraging, other than a little bit in the meats, which are very thinly traded. You got crude that looks decent, and gold is still holding up. But other than that, everything looks like it's, beans and some of the softs and so on. Other grains, they're really collapsing. But here we are looking at a chart of OIL. Nice looking chart. We've been in this trading range roughly between 24.50 and maybe 26 and a quarter, 26.30. Nice chart today. You could wait till it got above 26.30. If you were in it now, or you were looking to get in it right now, I would have my stop just under the lows of this candle here. And that day was, let's see, that was back on Friday a week ago on the 10th. That low was 24.73. So again, if that's too tight for you, I would have it parked just under the 25.20 area, which is the 50-day moving average. Let's take a look at Ford. We talked about this on the blog. Initially this was setting up pretty nice. It was a potential triangle pattern here. This stock has really been kind of all over the place for the last year. I think we were as high as 17 or 18. I think we had a post where we let it go at 17.55 because it broke support. We have not entered it since. But nice looking chart. It was actually, in hindsight, it was a buyback here because we got above this downward sloping trend line. We also got above the 50-day moving average. But as it stands right now, the way we're looking at it today, even though this triangle kind of broke down, we would now look at this area of 1230 as support. We'd want to see a close above 1290. You could probably take a shot at it at 1280, but I would use this as support. If it's a false breakout, it breaks down, you're stopped out, but then it heads up again. Get ready to have a short memory, get long again, and use that same stop just under support of around 1230. What else? There's a lot of good-looking charts that are breaking out of new bases. But again, you're only going to have so many bases to break out of, and then you'll have some false breakouts. So that's why we want to keep our stops kind of tight. International Business Machines here, 193.42 on a close today. Probably want to see it get above 194 on a close. And then I would just put my stop 5% back. You could play it tight here, or you could move back under the 50-day moving average. I think if we break this area of support here, we're going to come back down and test the 50-day moving average. We also want to be aware of gaps. Let's take a look at the SPY. So on the SPY, we still have a gap here that we want to be concerned about. Do I think we're going to fill that gap? Certainly. Not just because it's a gap, but this has had such a nice run. Just a decent or a minimal pullback is going to have us fill that gap. So it could happen as early as next week. You never know. But as it stands right now, the overall trend for the equity markets looks very decent. Again, we've been lacking volume, but we've been lacking volume all along. I would not chase anything. Just wait for patterns to develop and use your stops accordingly. Let's take a look at Apple. We dumped this at 510. We picked it up in here on our last trade. We sold some here ahead of earnings. I think we sold some more at 494. We sold some at 510. But that's not to say that this isn't going to go higher. There may be some type of pennant pattern developing here where you could get long with a close above 520. But I would just wait till this plays out. Forget about the fundamentals, the price, where it's come from. Just look at the chart in the now. And if it looks like something that's highly probable, whether the chart is up 90% or down 90% in the last year, really doesn't matter. Things have a tendency to go lower and higher than we would normally think. So go with the charts. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. We are simply long equities. We did put another hedge in today. I'm guessing around 11:30 or so Pacific time, going into the 3-day weekend. We don't know if the Greek news is built into the market. It could be, but I don't mind putting a little hedge in like we did last week with the moves that we've had lately going into a 3-day weekend. Okay, you guys, that's it. Doug McKay, antiwallstreetguy.com. Thanks for listening to the show. Thanks for checking in on the blog. We'll see you next week.